Let's talk about the housing market. A bit of an upturn in that at the moment.
That's right. You'll remember it had been in the doldrums for some time, a lot of uncertainty over Brexit and so forth. But in January, we saw an increase in the number of people actually going out and looking for places to buy. And we also saw an upturn in the number of people feeling confident enough to put their homes up on the market. So some people are cautiously optimistic that that trend could actually continue. Well, let's cross over to the property analyst, Kate Faulkner, to see if she's one of those cautiously optimistic people. Kate, are you cautiously optimistic?
Yeah, for the first half of the year, certainly. I mean, we had about 18 months of sort of influence really from Brexit, of people saying, well, I kind of wish I'm going to hold on, whether they're buyers and sellers. Now that we know that it's going to go ahead, that seems to have provided more confidence. But I don't expect the upturn to last for too long. I expect it'll be about 6 or 7 months, and then we'll go back to sort of a quieter market again.
Oh, why is that?
Well, mainly because the reason for the upturn now is because you've got 18 months of pent-up demand and supply. So basically what you've got is you're going to have a little bit of a rush of more people and buying and selling, and then that'll just calm things down a little bit, because although things went quiet 18 months ago, it wasn't just Brexit that was doing that. It was actually goes back to the recovery from the 2007 recession, when again we saw from 2013-14 for several years lots of markets doing very well, some still not doing well, by the way. There are some markets that still haven't recovered to 2007 levels, but it is just basically supply and demand, and at the moment we've got a bit of pent-up demand to go through the market.
I was going to ask you about the different performance of various parts of the country. What's holding some parts of the country back, do you think?
Well, the way that I look at the market, and we look really right down to the prices of properties on streets from UK level downwards, and what you see, if you take Aberdeen, for example, the local economy there is really suffering. So since 2014, you're looking at house prices falling by about 26% and rents, in actual fact, falling by 30%. And then you look at other areas, so the Midlands has been doing very well, but I would say they were sort of late developers in terms of price performance and rental performance compared to the rest of the market, whereas you go then head down to sort of London, Bristol, somewhere like the East Anglia, and in those areas they recovered very quickly and extraordinarily well from the credit crunch, and what they're now doing is slowing. So those are the kind of, you've got about 3 markets sitting there, and it's very much driven by what's happening to supply and demand. So population has a big influence, as well as are they building enough new builds for the growth in population, and then how well is the economy performing and what can people afford to pay.
Okay, Kate Faulkner, thank you so much for joining us.